Hey everyone, welcome back to the month of July. This is going to be your first weekly market outlook for the month of July 2024. So let's get started with a quick recap of last week. I think there was a lot of information here. We saw the uptick in terms of Canadian inflation and the Australian inflation. Obviously, given the two here, Bank of Canada has cut interest rate before this year. And in terms of Australian RBA, whether or not they're actually going to be continuing with their interest rate cuts in November is to be seen, because right now we saw inflation does pick up quite significantly. We had a jump from 3.6% to 4%. Initial comments coming out from the RBA was a little bit more on the dovish side, mentioning that they would much prefer to wait for the July numbers in terms of determining whether inflation has actually picked up. So that has kept the Australian dollar in range. Other than that, we have the US final GDP numbers. As per expected here, we got a little bit of a gain from 1.3% to 1.4%. Tokyo core CPI does improve, but again, doesn't have quite an impact into the market. The PCE numbers in the US also came in as per expected. We did see a little bit of an uptick in terms of the income, personal income and personal spending though, but the results itself in terms of the PCE numbers, it is as per expected. Core PCE is at 0.1%, a drop from 0.3%. Monthly PCE numbers is also at 0% as per consensus, so we don't actually see a huge impact into the market. All right, let's start with this week. Sunday, we just had the French election there. This is the first round, and obviously we do have some winners to announce as well. So the far right is actually leading the first round, far left on the pretty much on the second place, and Macron's centrist government is pretty much in the middle here. So it does give a little bit of a boost onto the euro here, because we saw a little bit of a significant gain in terms of the far right. Now in terms of what this far right means, it is a little bit more on the protecting the France economy first, rather than being being sided with the Eurozone. So I think that's basically the difference here. But again, second round is going to be on the 7th of July. This is not the final result as of yet. We do see that gap. We'll discuss that in the technicals once we're done with that. All right. Inflation number coming up from the Eurozone, that's going to be released on Tuesday. At this point in time, we are looking at a little bit of a stable inflation here. Headline inflation 2.6 to 2.5% is expected. Core CPI also expected to drop from 2.9% to 2.8%. Obviously, this is going to be the Labor week as well, Labor Data week, which is the first week of every month. So we're going to have our ADP NFP that's going to be on Wednesday. JOLTS is going to be on Tuesday. And also the NFP numbers is going to be released on Friday. But one thing to note here, what's going on the Thursday and Wednesday here, we have the FOMC meeting minutes. That's obviously going to impact the market slightly. But considering that all of this is actually going to be released on the eve of the 4th of July, which is going to be the Americans' Independence Day. 4th of July, uniquely enough, is also when the UK election is going to be. So the general election for UK is going to be on the 4th of July. This is going to create a lot of stir in the sterling as it is. Right now, I think market is pretty much stable as it is, but any surprises there, if the labor market doesn't win, that would impact the sterling significantly. Okay, so huge week. We are expecting a lot of numbers here, and if we take a look at the NFP numbers, we're looking at a slightly lower gain here. 272,000 gain was last month's NFP numbers. We're expecting 189,000. Unemployment rate is expected to remain stable at 4%. Average hourly earnings are looking to slow down a little bit from 0.4% growth to 0.3%. All right. Let's take a look at the dollar index first. I need to bring this up because if we take a look at the dollar index, obviously this is still technically in an uptrend. We did talk about a potential resistance at 106. That's basically what's been capping the dollar index from progressing any higher. Right now, this is currently within a technical correction. In the future, especially in the early month of July, we are expecting a potential drop below 105.50, and we are expecting more of a floor around 105. We don't expect price on the dollar index to drop below 105. We expect if price does break below 105.50 for the month of July, we are anticipating the range to be between 105 to 105.50, and we are expecting that's kind of where the technical correction for the US dollar is likely going to be. So it is still going to be maintained by 105, pending no negative data or any surprises coming up from the US economy there. We are expecting a stable range between 105 to 105.50 for the month of July. All right, let's take a look at Aussie USD just very quickly here. This is a very stable currency. Nothing much has changed. This is still range bound between 66 and 67 cents. Nothing much to talk about here. We're not really trending. This is just a range bound market condition. It is a very stable currency at this point in time. Now, next up is the Euro USD. We talked about a potential bounce from the Euro USD right around that order block that between 1.0625, 1.0650. We saw that bounce happen. We also saw the market gaps up earlier today, and the gap, it's quite significant. We're looking at a huge jump here, basically around 1.07 and a jump up to about 1.0750 at time of recording. This is where the resistance one is located for the weekly pivot. We do expect for this week, at the very least, that the Euro USD should fill this gap down. So we're anticipating a potential pullback closer to 1.07. And in terms of resistance, 1.0750 and 1.08 remains as a tough resistance for the Euro USD. So from a technical perspective, we do see this bounces here. This is currently not really trending, right? If we take a look at the current formation or the current structure of what's going on with the Euro USD, this is actually currently attempting to form a triangle. Now, what kind of triangle it is, we are not quite sure as of yet. It seems to be forming more of a symmetrical triangle. That means in the next 2 weeks, there's a potential for the Euro USD, should it progress, it will likely be capped by 1.08. That's also where the Ishimoku cloud is located. It is a pretty thick Ishimoku cloud there between 1.0750 to 1.08. So we do expect a little bit of resistance here. We're not expecting crazy range to be broken unless there's a little bit of an upset on the second round of the election there in France. Okay. Now, sterling, very stable. We expect that pullback closer to 1.26. We got that. Whether or not this is actually a good confirmation that the orders has been filled at 1.26, that we saw demands coming into the market there. Obviously, we still have that election in 4 days' time in the UK. That would significantly impact what's going on with the sterling as well. But from a technical perspective, we do see that floor at 1.26, and we continue to view that 1.26 to 1.2550 as a strong support level for the sterling here. In terms of resistance, we're looking at 1.27 as an immediate resistance there. Any break above 1.27 is likely going to be limited by 1.2750 and also 1.28. Take a look at where they're located. That's pretty much where the weekly pivot R2 and R3 is located. All right. Next is dollar Japanese yen. Dollar Japanese yen, as we previously mentioned, once it's inside that range between 160 and 161, we're probably going to be looking at a lot of traders, yen traders, sideline here. Reason being, if we don't see that intervention between this range here, we're potentially going to be looking at more traders lifting price up closer to 165. Now, 165, has been the talk in the market there, in terms of the line in the sand there for potential intervention. This is not a confirmed line in the sand. This is just an assumption made by the market there. But if there's a sustained close above 161, then we're likely going to see traders lift this up to 165. But any move back below 160, we would consider that there is going to be a profit taking, or there has been a profit taking to 160 and 161. We could potentially drop down even lower there between 158 to 157. Now, either case, right, in the long run, interest rate differentials between Bank of Japan and the FOMC still matters, and the potential outcome in the future is that we are likely going to be experiencing more yen losses. So either the market drops down to 157, 158, and then buyers going to pick it up at a lower price, or this breaks 161, and buyers are likely going to continue to push this up towards 165. That's pretty much it for the dollar Japanese yen. Do keep in mind the euro yen is at the all-time high right now. Sterling yen, we still have a little bit of a resistance from about 30 years high there. We are looking at a level around 215 for the sterling yen in terms of the next major resistance. Now, just to wrap things up for gold here, for this week's outlook, we're going to be talking about gold. And for gold, this one here is still in a range-bound market condition, very similar to the Aussie USD. We don't have any recommendations. We don't have any specific views in terms of whether it's actually going to be bullish or is it going to be bearish. This is still inside a very specific range that is 2,300 to 2,350, and for as long as it stays within this range, we're not anticipating any runs to either side. Do note that our concern here is that if it does break below 2,300, this will transition back below the Ishimoku cloud. This is going to be the first time this has done so since the month of March, and that would actually end the potential bull run on gold here. We would anticipate a much deeper correction that would mean a return towards 2,200 at the very least, and potentially even lower towards where the fair value gaps around March is located. That's going to be about 2,050 to 2,100 level. All right, so with that, good luck to trades for this week, and I will see you soon.